Alrighty, let's go ahead and get started. Welcome everyone to TradeFinder Live. Great to be back with you all during this trading day and during trading hours. We have a shortened trading week as yesterday was MLK Jr. Day, so the markets were closed. So great to be back with you all again during trading hours. First and foremost, as always, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing's to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away. Other than that, we have a little bit of drama to start this week out. We have the US dollar and treasury prices sinking and gold spiking as the globe flees US assets, according to the headlines. And so, interested to get into that discussion amongst the drama with the Trump Greenland threat and if the Supreme Court will end up upending the tariff threat that Trump is posing there as well. So lots of exciting topics among many others. There's a lot of big movers today with NetApp, NVIDIA, Intel, and many more symbols that I'll let the expert Rob elaborate on. But without further ado, let's go ahead and kick off. Very excited to interact with you all. So let's get going. Rob, you out there?
I am Zach. Hey, everyone. Welcome to TradeFinder Live. Hopefully everybody enjoyed a extended weekend, holiday weekend. Obviously, not the greatest way to start the trading week if you're long the market. You can see from the chart there, big down move on the open, adding to comments that Zach made on the intro. Obviously, this all came from the White House and tariffs on European countries. Basically, little commentary for whatever it's worth. I really don't think it's the tariff aspect of this. I think that the market has gotten used to the president's. Are we still good?
Yes, sir. All good.
Okay. I got an error message that came up, but been dealing with Zoom problems all morning. But well, hopefully we get through this. But I think it's the market's used to the way President Trump negotiates. He comes out with these tariff threats. Basically, it's a negotiating tool. He wants to get countries to the table. When he does that, I don't think anybody thinks that these extreme tariffs will actually go into effect. But my opinion is, and it's just my opinion, President Trump wants to control Greenland, no doubt about that. And I think basically he's trying to get the other countries, the European countries, in line with that. He wants support of that from his friends. He didn't like the fact that some other countries deployed military to Greenland. And so I think that's kind of where the market is struggling. So I don't think it's so much with the actual tariffs, it's what could escalate in this Greenland situation with other countries sending military assets to Greenland. So regardless of what it is, obviously Greenland is an issue, and we'll just have to see how the week plays out, how the negotiations play out. It could get messy, no doubt about it, and that would be problematic for the market. From a technical standpoint, we broke above the trend line. Remember, there's three ways that a triangle can break out. You can break out and run. Some of you have heard this numerous times. Those of you that are new may not have heard it before, because in the U.S. market update, I saw some commentary that seemed as not really sure the aspect of trading around triangles. And the idea is when you see a triangle, if the options are in line, cooperative, you put a triangle on, so you don't have to pick a direction. You don't care, but you have to look at IV. You got to find where the deltas are. We want that greatest delta gamma acceleration on a breakout. And if you have a big enough forecasted move, you just sit back and watch, and you don't have to pick a direction. Some of you were like, well, just let it break out and then pick a direction. I mean, do that as well. Sometimes you get massive breakout moves, though, and by the time you get to it, there's IV in either the call or put, depending on which way it broke, and then that makes it challenging to trade it directionally afterwards. So if you can get a low volatility entry on a triangle, then you benefit from that volatility spike when it breaks out, rather than paying that extra premium. So I prefer to allow that IV to be a benefit rather than worrying about it if the breakout slows down, because you can break out a direction on a big breakout move and then it continue that direction. But if it continues at a lower velocity, that IV still comes back out, even if you're moving the same direction. So just thought I'd throw that in there since I saw, hopefully everybody watched the US market update. But what we talked about is then back to the three ways that a triangle can break out. You can break out and run. You can break out, come back and test the breakout. And that's where we were on the US market update. Or you could break out and it's a false breakout. And then the big move is the opposite direction. The market loves to give head fakes. That's why you don't just jump at the first move of the breakout. You have to let it confirm and go. And so now we look like there is the possibility, and if this whole Greenland thing drags out, of a continued move to the downside. You can see where we're right now. So not going to be so much where we close today. It's going to be, is there a continuation below the 50-day moving average? Because right now we're just sitting on the 50-day moving average, and we've done that a few times here over the last several months. Back in October, we came down and tested it and then broke higher. Came back and tested it again twice in November, broke up, tested it again in December. Now we're doing it again in January. So October, November, December, and January, all 4 months had a test of the 50-day moving average included in there. So it's an ugly day today if you're long the markets, but not really the washout damage big concern yet. But we could get there within another day or two. The positive is that it was a big gap down. And so you know how things usually work on these gap downs. Oftentimes we come back and at least retrace part of it, especially when the gap separates from the 10-day moving average. And this is pretty separated from the 10-day moving average right now. So we tried to rally back a little bit earlier in the morning. We're giving some of that back now in the early part of the afternoon. Where we close today will be key. And then more importantly, what happens tomorrow, I think is what we'll want to be watching. We want to see volume, but since it's intraday, we won't know exactly what the volume is before we close. On Friday, we had some selling, but you're going into a 3-day weekend, and it's almost like a few people were worried about, you got 3 days, what kind of news could come out, what kind of posts could occur, and that's exactly what happened over the weekend. So those that were cautious on Friday are probably happy about that at the moment. So again, maybe a little bit of a bounce here from an oversold condition. That's a pretty big gap down and pretty good separation from the 10-day moving average to get a lot of follow through to the downside, but we'll see. The Supreme Court did not make the ruling today. Some thought it might come today on whether or not the tariffs were legal. That's going to hang over the market's head until that comes out as well. The stuff I read over the weekend was that there's not really an expectation that the Supreme Court would say they're unconstitutional. They didn't feel like they would want to go against what the administration's policies are, just from a general observation of how the Supreme Court works, but you never know. And uncertainty is the worst thing for the market. And so we have uncertainty on where the tariffs are, and we have uncertainty of what the plan is moving forward regarding Greenland. So all those things could be problematic for the market, but maybe we get a little bit of a bounce first and then head down, but we'll have to wait and see. Look back over here where we had the gap up, another gap up, again, separating from the 10-day moving average, and we came right back down to it a few days later. That happens a lot. Doesn't necessarily mean we're going to bounce tomorrow, but the further away we get from the 10-day moving average, the sooner that we're likely to get some sort of a bounce. So the volume's been just pretty stable here between buyers and sellers, hence the reason the market basically went sideways for a week or so, and then the move down today. We'll look at the VIX real quick, but again, just don't pay nearly as much attention to the VIX as I once did. Just don't find it all that helpful, other than kind of stating the obvious in this day and age. And you get an ugly day. You got some concerns out there geopolitically that we just went through, and you get a bounce up in the VIX. So we held that 15 level. We talked about this as well. If the market could continue the upside breakout and run, then perhaps we get a little bit of a drift down towards 12 and a half. Well, that obviously didn't happen. We got to bounce up off the 12 and a half level. I also wanted to go back and talk about the U.S. market update here a little bit. With this sideways move, it was starting to form kind of what I've labeled as the launchpad effect, where you get a real sideways consolidation. And I want to be clear on this. The term blast off from the launchpad effect implies that you blast off higher. But when you have this sideways consolidation, you could get a big move lower. But it usually gives you an indication that some sort of a outsized volatility type move is going to occur, either up or down. It happened that it was down today. So jumping right to the bond market, and Zach mentioned this as well. This is not what you want to see if you're long the market as well. I've been talking about this for quite some time, that if we started to get a breakout in rates, which we clearly are today, that's not conducive for especially the sectors that have been leading the market higher last year and the early part of this year. And you can see on the TLT, this is really a big move in the bond market. We get some gaps here, but this is a bit of an outsized move. So we did label the wave 5 prices on the TLT. So prices and yields move inversely, remember, and the TLT shows prices on the 20-year. So with prices down, yields and rates are up. So they're up on the longer end of the curve. And then we move to TNX and you get the opposite. You get a move to the upside because TNX shows rates on the 10-year. So TNX shows rates, TLT shows prices. And there's the breakout move. We've been sitting right here and underneath this 420 level for quite some time on the TNX, and a breakout there could continue. So if we do get follow through here, rates continue to go up. The TNX looks like rates could proceed a little bit higher from here. It's the TLT with that big gap down that makes you wonder, could there really be follow through on a gap that size on the longer end? So we got to watch the bond market. As I've mentioned in ad nauseum in the past, you don't have to be an expert in the bond market to be a good equities trader, but having a good working knowledge of how the bond market affects the equities markets is beneficial when you're looking at how to trade the equities market. So they are intertwined. There's more money in the bond market than there is in the equities market, and the equities market normally takes its cue. Now, the last thing here on TLT is, as we've been talking, this zigzag pattern that worked to a T, TLT. We had a B wave correction right at 50%. That gives you an expectation of 100% extension. So it did what it was supposed to do, and we pegged there for a month down here at this level. Then we had a little bit of a bounce up in prices, but we labeled a wave 4. So we have a pretty well formed 5-wave pattern on TLT. And then in addition to that, we talked about how the zigzag had satisfied the extension, but with this head and shoulders pattern here, we had not had the move down to satisfy the head and shoulders pattern. And if you're new to a head and shoulders pattern, basically you have a neckline, and that's the support. And then you get a bounce up, comes back down, tests the neckline. That's the left shoulder. Then you get a bigger high that forms the head. As you come back down, test the neckline, you bounce again, and that's pretty similar to where the high is on the left shoulder to create a true head and shoulders pattern, then back down to the neckline. So that was the formation. When you look for what does that mean, you measure from the neckline to the top of the head, and however far that was price-wise, you look for the same type of a price movement below the neckline as your target. And that brings it right down to a potential 161.8% extension on the C wave of that zigzag. That's where we seem to be heading. But again, this separation here, that's a pretty big separation from the 10-day moving average for the TLT, which usually doesn't get very far away from its 10-day moving average. And I talk about this a lot as well. I thought I would highlight it for those of you watching. It was commented on in the U.S. market update on YouTube. How far away from the 10-day moving average activates that rule? No security in any time frame gets too far from the 10-day moving average. And I wish I could give you X percentage is what we look for, but it doesn't work that way. You have to look at the individual chart. Every security is different as far as some of them are more volatile and they get further away from the 10-day moving average than others. And so if it's kind of a volatile stock, moves a lot, you need a little bit more of a movement away from the 10-day moving average before you start to consider it an extreme separation and potential for a bounce back. TLT is not like that. We usually don't get too far away from it. So this is about as far away from the 10-day moving average as we get, but nothing's 100%. Nothing works every time. And could we go lower in prices on TLT before we get that oversold bounce? We could, but we'll just have the market's going to do what it's going to do. Those are the guidelines that we keep in mind to look at. So no help from the bond market at all on this equities sell-off day. And then looking at the dollar's down, as Zack mentioned. We're still, though, in the Goldilocks channel. So can we stay there? And I've mentioned that the dollar, as long as it stays in this channel, it's cooperative for the equities markets to go higher if they want to. And we'll stay with that modus operandi until we either break to the upside out of this channel or break the support line out of this channel. So even though the dollar is down today, it's not hurting things the way the bond market is today. So that wraps that up. And then we'll just go ahead and jump to the metals. Zack mentioned gold flying today. There you go. I talked about this in the U.S. market update, if you watched it, where we had this consolidation here. And I made the comment that I felt that the move to the upside was not over in the metals, and that we've had that big move in silver. Maybe gold outpaces or takes the lead again in the movement of the metals. And there's the big gap up in GLD. We are in this wave 5 high area. And so then we go and look at silver and it gapped up, but you can see not to the degree that gold did. But man, silver has had a run. And we talked about this little area here where you had unusual volatility in silver. Going back and again, looking at the history, looking at the past, you can see silver has had a really nice move up from the middle of last year. But look how small these intraday bars are, these daily bars. Not a whole lot of intraday movement. And then we had this ascent, we got above 45 degrees. So it's getting a little vertical there. But then we had these big bars here where you had gap up, gap down. I mean, all kinds of volatility here for a little over a week. And I've made the comment that volatility marks market tops and market bottoms. So when you see that kind of volatility, you know something's getting ready to happen. Obviously, this isn't a bottom in silver, but it applies that some sort of a move is about to happen, and clearly it was back to the upside. So how far can gold and silver run? Still in a wave 3, so we could go higher, but man, this has been some amazing move in GLD and SLV, and it's almost like gold was telling us that there's some uncertainty about something, and we know I think the Greenland thing outweighs what the Supreme Court says about tariffs, because even if the Supreme Court rules against the president on tariffs, there will be a rush, again, my opinion, in the administration, because all that means is that the tariffs have to go through Congress. And one party, the president's party, controls Congress for now. We'll see what happens in the midterm elections in November, but I think there would be a scramble to try to get the tariffs through Congress. So then if the Supreme Court, again, rules that the president was outside his power to do these, they're still going to try to get them in. So I don't think that changes the tariffs picture too much. It just postpones it a bit and puts it further out in time. I think there's other things going on that's causing the metals to rally like this. Obviously, a demand for it, but when you see this, it's kind of a safe haven trade. And maybe there's concern that things get a little stickier regarding Greenland than where they are right now. Now let's move to energy. Look at this. There's that move in natural gas. Some of you had commented in the U.S. market update that it's worth taking a shot on natural gas because we were so low. How far is I even made the comment? I agree. UNG is way oversold. Is it going to zero? I don't think so. And then there's the big, huge move today. Obviously, a pretty significant winter system going through the country is helping that a little bit, but there was some pent up shorting here, and we were kind of tightening the spring. I used to use that analogy in talking about triangles and consolidation back in the days when we were doing live seminars traveling around. And I would say, you know, you compress a spring far enough, the further you compress it down, when you release it, the more it springs back. And so that's what happened, I think, in natural gas. There was just no way of knowing exactly where that was going to happen. But it did happen at a pretty logical place because we had the B wave correcting right at the 38.2% fib level. That gives you the expectation of a 61.8% fib extension in the C wave. And once again, right where we went. So, boy, if you're not looking at Elliott Wave and you're not focused on zigzags, I think you're missing out. Again, nothing's 100%, but boy, these things work a lot and can give you an edge in trading directionally. And then oil, not acting like natural gas is today, but it has had a little bit of a spring back, and that had to do with the news about Iran. And oh, by the way, that's still out there as well. What the involvement is going to be. All the headlines about Greenland kind of put Iran on the back burner, but it's still out there. And I think that put a little bit of a bid under oil, and we'll see if it can find some follow through here. We're getting up into an area where the OPEC and OPEC Plus wants to keep oil. Not to tout any show, but if you've followed the show Landman on streaming, boy, they really get into a good explanation of where they like to keep the price of oil from a supply-demand balance so that oil doesn't get too high in price, because that actually hurts demand. You know, we're not going to drive as much if it costs a lot more at the pump, but they don't want it to go down too far because they still want to make profits on the amount of money that's committed to try to get oil out of the ground. So this is the sweet spot right in this 70 to 75 area, and that's where we are. So can oil go higher? Well, if it does, just like I had a fear on how far down will OPEC let oil go before they cut production, we're back to what the OPEC clearly showed us on these two spikes, where on each of these two spikes, they increase production, once again, bring the price back down into that area that they like. But natural gas is where the action is today. But goodness, how do you chase that move? I know people, myself included, itching to get in. And when you're watching this and feeling like, man, we're getting awfully oversold in natural gas, there's an opportunity there. And then it gives you this big, huge gap up, which takes a big part of the move. And once again, I don't want to chase that because there's IV spiking and the call options all over the place. From an option standpoint, we need to let it calm down, maybe get some backing and filling here in natural gas, and then maybe there's some follow-through trade there. The expectation when a zigzag completes is to go back to where the B is. So you retrace the entire C wave. So that means there's more upside potentially in natural gas. But after this big gap up, hard to chase that, because even if it does go higher, and as I mentioned in the very beginning, if it goes higher in a lower volatility type move up, then we're going to have a problem with buying options with high volatility, being right on direction, and then wondering why the options aren't making more. And it's because that volatility is coming out, which is offsetting whatever increase you would get in the options based on the delta and gamma relationships. Now let's move to the cryptos, and then we'll look at the rest of the markets. But I've skipped those because I feel like that's kind of um, uh, understood that all the markets are going to be looking pretty ugly today. So I spent a lot of time on the SPY. But the cryptos are in danger, danger, Will Robinson land right now. They had some hope, I think. We had a little bit of a move up with that potential vote last Thursday on some legislation on the new crypto bill, and it kind of got tabled for a while because there was some disagreements, and so now we're moving back down. And in all the research that I've done on how long will it take to get that done, the expectations are the earliest it would be summer, but we all know they want to try to get it done before the midterms. If the Republican Party loses control of Congress in the midterms, which a lot of people think is likely, then who knows if that bill will get passed, because the current administration is more pro crypto than maybe the other party. So it would kind of create a stalemate there. So there is a push to get that legislation completed before the midterms, but that's November. Where's the catalyst now on cryptos before then? So I think we could see a potential for a continued downward move here, with that catalyst being getting the crypto bill passed. And a lot of people think that's going to help put a bid under cryptos. But when does that come? That's where the uncertainty is. And we could certainly see both Bitcoin and Ethereum drift lower in the meantime before that occurs. So we had this triangle on Ethereum, and remembering the three ways we can break out. All right, we can break out and run, break out, come back, test the breakout, and then run the same direction, or you get a false breakout and the big move is the opposite way. Note there was no follow through on the breakout that Ethereum had. We had a breakout day, no confirmation or follow through day, and then back down. And now it looks like maybe the move is going to be to the downside in Ethereum as well. So maybe some more downside in the crypto space, as there's going to be this vacuum of catalysts, in my opinion, until that legislation gets passed. So we could move lower before moving higher. So just be careful if you're trading in the crypto space, at least on the short term. If you're a long-term person, then maybe you use these opportunities to add. But if you're viewing that crypto is still bullish over the long term, then you don't worry about it, and you just move on. But if you're trying to trade it, it would be worrisome in the short term. Now, looking at the other markets real quick before we move over to the Q&A, we'll take a look here at where we are on the DIA. Obviously, you're seeing a downward move there as well. And with that move to the downside, same kind of scenario as the SPY, except we're not even down to the 50-day moving average yet as we look at the DIA. So where do we go from here? We could go lower, not quite the same gap down, a little bit of one, but not to the same percentage as with SPY. We kind of satisfied this breakout. That wasn't a huge triangle. So we broke out, and then we just kind of bumped our heads up here. I did think we'd see 500 first before any sort of a pullback. We didn't make it, but you've heard me say that this part is worrisome. I've been talking about this for basically a couple of weeks since we got up here. 142% is pretty extended on the wave 5. We needed to see for hope of a continued move higher on the DIA, that wave 5 relabeled to a 3. So we were a 5 back here. We stayed a 5. We stayed a 5. We made a new high and we stayed a 5. So there wasn't enough strength, at least based on the Elliott Wave algorithm, to relabel that to a 3. And when you have a wave 5 that's extended that far, that's concerning. Yes, it can go higher, can go up to 161.8, but that's already a pretty extended wave 5 and just kind of running out of strength to fight off news events like we've had over the past few days. And then we go to the Qs. You would imagine with the bond market not acting very well today, rates going up, not conducive for a move higher in the Q. Same scenario here, attempted breakout, but we didn't really get it. And now we're below the 50-day moving average on the Qs. And gosh, this could get ugly for a while if there isn't some sort of positive news. We know the president watches the market. He doesn't like to see the market go down, but he might be willing to let the market move lower if he's really committed to the strategic aspect of having Greenland under U.S. control. So who knows how long this back and forth is going to be regarding what happens with Greenland. And then looking at the IWM, which had been really moving higher. Talked about this, even though rates spiked up today, they've been leveled off at kind of higher rates as we showed on TLT, and yet the IWM has continued to move up. We've talked a lot about how the IWM is the most rate sensitive to all the markets. Small caps, they need to borrow money. So the IWM tends to move either one with rates, and oftentimes that's a correlation. The IWM just moves with rates. Whatever rates do, that's what you can see from the IWM. But then the other side of it is also the market's tolerance for risk, because higher beta names in the IWM, small companies, higher appetite for risk. And there has been with the IWM moving up even in the face of higher rates. Now, we could argue up until today, even though rates have been a little bit higher, they've been stable, but not today. Not today. Rates are going up significantly today. We finally broke that 4.2% on the 10-year, as I showed earlier. And so we're getting a move down, but notice that not as bad as the other markets. So the action is still in the IWM, even though it's down today, nowhere near as bad as what's going on in the rest of the markets. So the IWM hanging in there pretty well, all things considered. All right, so with that, Zach, we'll go ahead and open it up to the Q&A, and then we will have our case study consideration for today as well. So with that, let's take some questions. There may be some following this holiday weekend.
You are correct, sir. Definitely got some questions for you. We're going to start out with this first one here on RKLB, Rocket Lab.
Yeah. Now, there are a couple pockets of strength today. It's not like everything is down. Qt, SanDisk, Micron, a few of the others. And then we have the big, it's kind of taken back seat. Normally, it's the big news where they have the economic summit in Davos. That's going on right now. Usually you watch that because they have lots of CEOs there, and every now and then you can get a tidbit of information, almost like a mini earnings conference call with all these CEOs, but everything else is kind of superseding that this week so far. Hanging in there pretty well, Rocket Lab, still in a wave three. All this stuff hadn't even made it back down to the 10-day moving average yet. So if you're long this, I don't see any reason to get out. And if you're long, you got to be willing to accept potentially a little more downside, I think, because we could come back down here and test this support around 80. Now, if we broke 80, I would be really concerned about this. But, that's still a ways away, because if we're in the 90 price area, that's 10 more points to the downside. So you'd have to decide, how much drawdown are you willing to accept, or how much profit are you willing to give back in the case of Rocket Lab. But that would be if we break the 10-day moving average. So for now, I don't see any reason to exit, performing really well. If you were really concerned and you didn't even want to let it go down to 80, then your next level would be right here, somewhere around this 90 level down to the 10-day moving average. So your little corridor here where you'd still feel okay could come down to around 87. Well, that's a lot better than moving down to 80. So performing pretty well today. If the market does calm down and if yields bounce back down, which they might, maybe we can resume this to the upside. but I am a little bit cautious, well, a lot cautious on the market in general until we get a little more clarity on what's going on with this Greenland stuff.
Thanks, Rob. Next up, we have a question from Maria. Is AVAV going to 300?
Let's take a look, see how it's acting today. Been a good spot, been kind of where the action has been. We did hit 400, which we thought, and big round number, obviously a place where perhaps some profits were taken on the move. Ugly day today, and breaking the 10-day moving average. So the fact that it already hit 400, it's got some work to do. So not only did it have the big round number of 400 there, it also had resistance here from back in October. So 400 was a key level. It had gotten a little bit vertical, gotten a little separation from the 10-day moving average. We need to see what happens over the next couple of days. My concern here on AVAV would be how vertical this move was going up. As you know, what goes vertically up oftentimes comes vertically back down. Just go back and look at what happened in September and early October, where you had a very similar vertical ascent here, and then it came back down. And if the market continues to struggle, that could easily happen in AVAV. So the next level, if you're long, is you got to break above 400 with follow through. But that is going to have resistance, not only from Friday, but also if it turns and tries to run back up, all the consolidation at that same level that occurred back in October. So I would be, really cautious on this. Maybe tighten stops if you've caught that run. Congratulations if you got that big move, but maybe you have tight stops here, and if you get taken out, wait, see how far back down this comes. You'll likely get another entry to the upside. I don't think this space is going anywhere anytime soon either. Kind of long-term bullish on this space, but in the short term, with the way the market's acting, you could see further downside. The 50-day moving average is all the way down here at 300, which could be in the sight line of AVAV, and it might find a little potential support there. As you can see, as I draw this line here, consolidated a little bit in September. We broke below it, but consolidated underneath it in November, December, broke down, came back up, and then blew right through that 300 level. But maybe we're destined to come back and test that. So be a little bit concerned over the market action. Maybe we get a bounce back tomorrow, but I think we need some positive news today. We need either some softening on the stance out of the White House, or we need some sort of just a reflex bounce in the market to get it back up. Other than that, I'd be a little more concerned with some more potential downside, Maria.
Thanks, Rob. Next up, we have PAAS for Will.
Yeah, we're going to be back in silver land. And, as long as this uncertainty is going on, they're running to the metals clearly. Gosh, I didn't think metals would get quite this high without a little bit more consolidation, a little bit more backing and filling, but they have taken off and run again as a safe haven play. I would stay long, PAAS, with noting that support is pretty good there at 55. A break of 55, I think, changes the game there. We're a little bit above the 10-day moving average. Well, maybe some sideways stuff here is warranted. But as long as we can hold 55, I think that's a good place to be. A break above 55, pardon me, you can see the next support line is down around 50. So that would be a concern there.
Next up, we have Netflix.
Well, we're going to find out more about Netflix tonight, aren't we? So earnings, I believe, after the bell today. And the change, I had mentioned before, the problem with Netflix on this move lower was how long this deal on buying Warner Brothers and the fight with Paramount, all that stuff was going to take. You expected that Netflix would come out and up their bid, which they did, and now they've upped their bid to an all cash bid with Netflix. Most people think that's going to win on the bid. Most people think that Netflix is going to end up with Warner Brothers. We did have this consolidation here for a while at 95, but it broke lower. But with the earnings report, you would have to think that, boy, it'd have to be a pretty poor earnings report to at least not get some sort of a snapback in Netflix. You would imagine that the earnings are going to be pretty good, maybe better than expected. And then the market's going to have to digest how this all cash bid is going to affect Netflix's bottom line, how long it would take them to recoup that. All those things, I'm sure, are being analyzed as we speak. They're going to be talked about after the earnings report comes out. But I do think there's a chance here that we could see some sort of a at least short-term snapback on Netflix's earnings, unless the earnings are not what I would expect them to be, which is better than what the market is looking for. So as long as you're in that news kind of an area, that makes trading the stocks challenging. But if you wanted to be a little speculative and take a shot, you would always be, even if they report good earnings, but they come out and say that it's going to take longer for the acquisition of Warner Brothers to be accretive to the bottom line of Netflix, that would be your risk on potential further downside there. But I just feel like if you wanted to take a speculative shot, Netflix might not be a bad place to do that.
From there, let's head over to LMT.
LMT. Well, Lockheed Martin, you would think, might be benefiting from what's going on, and they are with the threat of military action in Greenland. President Trump said he wasn't ruling that out. Obviously, hopefully that's the action of last resort there. Again, the tariffs, I think he's trying to put pressure on these other countries to, even if they don't support the U.S. controlling it, I think President Trump wants these other countries to feel like it's the best interest for all of the European, all our friends, basically. But they haven't acted that way, and that's angered him, which is why he came out with the tariffs. He did not like seeing all the military arriving in Greenland from these other countries. But back to the chart of Lockheed, pretty darn vertical here. Little too much separation from the 10-day moving average. Nice wave three, pardon me, but I would want to see some backing and filling here. And you might think, but isn't it in the tractor beam towards moving up to 600? And that's a fair point. It could. And if we weren't so far away from the 10-day moving average, I would think, yeah, we'd probably hit 600 first. But boy, that's a big separation there. And again, maybe some backing and filling first, and then the run to 600. But with Iran still out there, I think this is a good space to be, maybe just not for the next couple of days.
All right. And from there, we have a question. I noticed an island reversal on the XPX daily chart, which is considered very bearish with this backdrop. What is expected short, intermediate, or long-term for SPX?
Well, now we're going to the cash market. We looked at the SPY quite a bit. So the SPX is the cash market for the S&P. And when you take a look at the chart, there is certainly, I call this, some people call this a rising wedge. I tend to call it a pennant pattern. That's the way I learned it. So different terminology for basically the same pattern. And you have a lot of people feel like when you have an ascending pennant like this, or whatever you want to call it, that it is a bearish pattern and you could be reversing, and it may. The wave five only extended 25%, so there could be more room to move there. But obviously, with the way the market's acting today, and if we do continue the downside, then that could be the end of the wave five. And boy, we'd be coming all the way down here to 6,600. And it sure feels like the market is awfully bearish right now. Just hard to imagine anything happening that could um, keep the market higher. Maybe had the Supreme Court made their ruling today in favor of where the tariffs are, that would take at least that uncertainty out of what's going to happen if the Supreme Court rules against the administration. But I would be at this point without a turnaround and break above this upper trend line, then I would be concerned of more downside on the SPX as well as the rest of the markets, basically.
And next up, we have a request for your analysis on the upside for BABA.
Well, it might not be a bad place to look with what's going on more domestically. Kind of look overseas to some other places, and we did have a pretty vertical move here. We're testing the 10-day moving average, but not a whole lot of give back. This could be a place to go hide for a while. The defense sector is a good place, but it's moved vertically. Metals are a good place, but they've moved vertically. So maybe taking a look at China and some of these other stocks makes some sense right now. So yeah, I'd keep an eye on that one. It could come down to 160 right in this area here, but there's a lot of support right here in this area going all the way back to September of last year. So I would be surprised if BABA broke below 160, but I think you're looking in the right place there. And that could be something to continue to keep an eye on.
And next up, we have, hi, Rob. I finally caught your live. How about the CTM Castellum?
Okay.
Castellum?
Yep. Glad you're able to make it. And we have this area here, solid support there at $1. And we've got the moving averages all converging here. Every time it's tried to break below that, it's held. And maybe this could be another opportunity. Just have to wonder how far it can go, because every time it breaks from here, and look at how good this support is at $1, breaks below it, gets right back above it immediately. And then we try these breakout moves, but every time it breaks out, it gets sold into. If it could somehow, even 130, but more on 140, if it could get up there, boy, there's going to be some really nervous shorts, and you could get a short squeeze out of this where you get follow through on some of these moves here. So, yeah, that would be a place I think where you could take a real speculative shot as well.
IREN.
Well, the president is speaking right now, so who knows what may happen. The market just took another leg down. So, gosh, we're down 133 on the E-mini futures right now. So we're kind of twice as low as we were when the market opened. Maybe he says something that turns this thing around, but for now, the market is kind of erring on the side of caution here, moving forward. I just thought I'd throw that out in case something significant happens while we're talking. I'm sorry, what was it, Zach?
Yeah, no worries, Rob. Definitely worthwhile news. IREN, IREN.
It's kind of just saying, what market sell off? He's not worried about it at all. Hanging in there really, really well. You got to love the Elliott Wave pattern. Nice ascent on the wave 3, not a real ugly wave 4. caught itself right at the 61.8% fib level, which is my favorite of all fib levels, whether it's in a zigzag or in a five-wave pattern. And it looks like, barring, just a complete meltdown in the markets, and I don't think that happens unless maybe some military action is used, but I think this one looks like it wants to continue higher. I think you're on a really good one there. There's nothing that looks concerning in that chart at all.
U to the fourth.
What?
Sorry. You.
Oh, I thought that's what you meant, but I wasn't sure. Um, Energy has been pretty significant over the past couple of weeks, and you wonder how long it could continue to move. Um, if there is military action against Iran, that could put another bid into oil. I just caution on, we've got natural gas. I'm not exactly familiar what all the holdings are in UUUU, but natural gas could certainly follow through. It's been oversold for a very long time, maybe not in the next couple of days because of the big bounce today. My concern would be oil getting too far above 75 and OPEC announcing another production increase. So there's some risk there, but no doubt that chart looks pretty good moving forward. On this kind of a scenario, I would look at the CCI, and you can see that we are tilting up. We had a big extreme point high here, came back, held above positive 100. That's good. Looks like we're turning up. So at least for the short term, looks like we could get some follow through there. But on the longer term, again, how far does OPEC let oil go if it continues higher like this before a production increase? And that could slow this ascent down. But you guys are picking some. I love doing TradeFinder. I say that all the time. But you guys are picking some really good places to be. So you're obviously doing your research and looking around to see, okay, I stay away from the names that we hear day in and day out. Where are places to go? And you're finding some good ones. I would keep some stops in place on this one though, for the reasons that I just mentioned. But that one, boy, if it could somehow break above 25, using my racing analogy a lot, you're in clean air, no resistance in the way. Who knows how high it could go? So, if you're long that, no reason to get out. If you're looking for an entry, just know that it might have a little bit of resistance here at 25, but boy, you'd be in a good spot if it could break above 25.
FDT or Foxtrot Delta Tango as entered in the chat.
Oh, so we got a military flavor here, huh? So I guess we're on the NASDAQ, I would assume, but there's an FDT on the Amex Federal Trust. So maybe whoever asked could clarify which one they're interested in. But, this is XUS, which I mentioned earlier, is probably a good place to look right now. Just like the comments that I made on Alibaba, nice wave 5 extension here. And we're right in the middle of the tap box. Note that the upper end is up here, so there's more we could go in the wave 5. I would want to definitely look at the ADX. The DMI looks great. CCI kind of ho-hum. It could turn and move higher. I think this is where you want to look right now, is outside the U.S. So if that is the symbol they were asking about, I think that's another good place to be. So more kudos to all our viewers today.
Alrighty, next up we have INTC.
Intel was really looking like it was going to be a darling. It was doing okay earlier this morning, and still kind of doing okay. Again, if the market doesn't completely fall apart, then I think that the wave 5 goes higher on Intel. but it's in an area where maybe it bases for a while until all the noise settles down in the market. Right here in this wave five is a pretty solid place to be. Um, I don't think there's a whole lot of risk in this one. So if you want to be in this space, Intel, I mentioned SanDisk, which has had a heck of a run, but outperforming the market as well today. So throw that one up on the screen. You can see pretty nice. It's given some of that back, but a pretty nice breakout move. Micron. There's a few places that you could look for this kind of space here. We pegged right at that 100% extension. We had a 50% B wave correction, pegged right at the 100% extension. Now we seem destined to go up to that 161.8% level. So just throwing a few of those in as we're nearing the end of our time. We need to get to our case study consideration. So maybe one or two more, Zach, and then we'll work on that.
Okay, yeah, I was just read my mind, took the words out of my mouth there. Next one we'll go to is what wave is Apple in?
Boy, I haven't heard about Apple for a while. Let's see what this looks like because with Apple breaking down, you've heard me talk, I think, if you've listened in the past, Apple to me is the hardest stock to short in the market because they have so much cash and they can initiate a stock buyback at any time, but you don't know when. And unless you have, access to their boardroom, you just don't know when they're going to. So how far down are they going to allow it to go? If they don't do anything, then highly likely we're coming back down here to the previous wave four. The wave five obviously is over, got right up to the 61.8% level, and then headed lower. And when the wave five ends, which it clearly has, broke this support here, so we can take that off. Consolidated for a bit, but it was just a little oversold from the 10-day moving average. Another one that doesn't see how Apple rarely gets too far from the 10-day moving average. And that's why you have to, for that rule, you have to look at the history of the individual underlying. But it seems like Apple's, again, barring an unexpected stock buyback, I think Apple is headed down here towards 245. Seems to be where Apple wants to go. And then we could take a look again and see what it looks like.
All right, and last one before the case study consideration will be HYMC. It's going crazy. Is it worth buying at this lofty area up 16% today?
Well, yeah. I mean, another way, the mining stocks, another way to play this vertical move in the metals. That one's a little high right now. So I would look at this the same way I look at gold and silver and the other metals is little vertical, little far away from the 10-day moving average. If the news stays bad or gets worse, then you could go even a little bit more vertically. The ideal scenario, and the market rarely gives you the ideal scenario, but the ideal scenario is a little bit of backing and filling here, kind of sideways for a few days, let the 10-day moving average catch up, and then it takes off again. But as far as where we are right now, if you're already long this, as long as it stays above 35, I think you stay long, even with this vertical move and the distance away from the 10-day moving average. So you might have to withstand, a little bit of back and forth here for a few days. But as long as it holds 35, I think you're good there. But a break below 35, kind of what we were talking about earlier, it comes to 30 rather quickly because it was basically 2 days it took to go from 30 to 35. But if metals stay elevated, even the miners could still perform pretty well. All right, so with that, we'll look for our case study consideration today. You can probably already imagine what it's going to be, but I did want to show we did have a good quick move out of ITA last week for our case study consideration. I did post the close of the idea at least for today. That looks pretty good. And if you're wondering why, well, it got a little too far from the 10-day moving average. So it got a little vertical, a little too far from the 10-day moving average. But I know some of you, because you made comments about it in the market update and through support, did well on that one. So hopefully you caught that move. And then what we're going to look at today is just simply this is what's prudent right now. It's not real sexy, but being bearish on the S&P, buying some protective puts makes a lot of sense right now against whatever else you have in your portfolio. Even if you're in some of those sectors that a lot of you are asking about that seem to be good places to hide, it's still there is the possibility that that 5 is over. We could see a retracement if nothing changes all the way back down to this previous 4 on the S&P. It's prudent to have some protection here. So we're going to talk about being bearish on the S&P just for protection, not necessarily saying that we're going down here, but the possibility is real that that could occur. And so with all that, again, it's prudent to have some protection in your portfolio above and beyond being long in some of the sectors that are still performing well. So that makes sense. So that's going to be it. I don't think we'll do an official post on this one, Zach, because it's really just a prudent idea, or it's not a full idea. It's a post, is what I meant to say, just on what's a smart thing to do right now. So we'll leave it at that.
Very well. And as we're running over time anyways, that works out well for this week. So I'll just pass back over to you to wrap things up. And thank you all who attended live. Always a pleasure to interact.
Great session. And, you know, I just say this week in and week out, this is my favorite show because the stuff you guys come up with is so good. Hopefully, you guys all talk to your friends and say, man, you got to show up at this show. You know, forget my analysis and my commentary. Just to participate and listen to the things that you guys come up with is beneficial from a community standpoint, which is a great aspect of the software from Hub, is the social media aspect of it. And you guys are just like the bellwether of how well that works. You come up with sometimes stocks I haven't even heard of. But you know, you're looking in the right areas, so it's fun when you have an in-tuned, I guess would be the way of saying it, listening base to this event. So yeah, let's just continue to grow TradeFinder. It's awesome. Thank you for spending the beginning of your trading week, even though for some probably not a fun day to start the trading week, but you know, we'll see. The president, he's done speaking, and he apparently didn't say anything too significant about moving the markets. Don't know what he said, but we had a leg down when he first came on, but that's stabilized now. We haven't snapped back, but that's where we are at this moment. Have a great rest of your trading day.